Hi, this is R Sundar. Welcome to question and answer session. Let us go to the questions straight away. What do you think will the second wave of selling begin once the restrictions on short selling are lifted? And many people, especially the technical analysts who have studied the 2008 pattern, expecting another big wave of selling. And I mentioned many times, it may happen or it may not happen. It is not necessary that the pattern has to follow every time. In fact, in the beginning of June, when I tweeted saying, what is your opinion about June expiry? Most of the people said market will crash. But the market has shot up significantly. So, therefore, as a trader, you have to go along with the market. There is no point in expecting a big crash. Because the people have studied the pattern, so they assume that market has to crash one more time, and most of them predicting that 7,500 will be broken on the downside. So now market is not listening to them, market is going, market is shooting up, they start looking what next. What can be the reason why the market can fall? And everybody started talking about the coronavirus, but coronavirus is not able to stop the markets. And which country affected by the coronavirus the most? It is the US. More than 1 lakh people died. But look at the US market, it has hit all-time high already. So now people are thinking, when short selling ban is lifted, market may fall. And let me tell you, actually there is no limit, no ban on short selling. Up to 500 crore, you are allowed to do the short selling. Beyond 500 crore, whatever the shares are there in your demat account, equivalent value you are allowed to go for short selling. Even beyond that you want to do short selling, you still can do the short selling. Only thing is you may have to pay more margin money. So practically there is no ban on short selling. So this is called confirmation bias. People are expecting market to crash and they want the market to crash. They start looking for the reasons. So always go along with the market, and right now the markets are bullish and there is no reason to be bearish. Even if you are bearish, market may fall 500 point, 1000 point, but I am not expecting Nifty to break 7,500. Is there any minimum amount should be invested in Bharat bond? As I saw, it is minimum 1 crore in their website. This is a wrong information. You can invest any amount in Bharat bond. Right now, one Bharat bond is trading around 1,050 rupees or 60 rupees. Even you can buy one Bharat bond with 1,050 rupees. There is no minimum investment. Is it allowed to trade in Bank Nifty futures with ETF as collateral with the same margin as options? As long as you give shares or mutual funds as a collateral, you are allowed to trade in any futures and options contract. There is no restriction. You can trade in options, you can trade in futures. But there is one big difference between trading in options and trading in futures. If you are trading in options, you cannot buy the options, you can only sell the options. If you are selling an option and tomorrow your position goes into the loss, let us say you are losing 10,000 rupees, then that 10,000 you don't have to pay in cash. Even that 10,000 can also be adjusted against the collateral. The only thing is you should not book the loss. When you book the loss, you have to pay the cash. If there is a temporary MTM loss, you don't have to pay. It can be adjusted against collateral. Whereas if you are trading in futures, for margin money, you can use the collateral. For MTM loss, you have to pay the cash. So the reason being, futures MTM loss or profit is settled on a day-to-day basis, whereas option buyer, he does not get the MTM profit. He gets the profit only when he closes the position. So until then, the obligation of the seller is only to the exchange and any exchange obligation can be adjusted against collateral. Next one, what happens if we make loss? Will they take it from our Bharat bond? Yes, of course. You make a loss, you have to pay the cash. If you don't have the cash, whatever is the loss, equivalent amount of Bharat bond will be offloaded to compensate the loss. And in fact, bank FD as a collateral, and if there is a loss, then I have to break the entire FD to pay the money. But now, Bharat bond is, one bond is about 1,000 rupees plus, and if I have lot of money, I can buy the Bharat bond. Tomorrow, if there is a 5,000 loss, if I am not able to pay, I can just dispose only 5 Bharat bond. So in that way, Bharat bond as a collateral is far better than bank FD as a collateral. Can you please speak about selling monthly options with a weekly hedge and how rollover of weekly hedge should happen in light of the new margin rules? Facing issues with rolling over my weekly hedge without losing margin benefit, strike price out of range. Okay, I think he has not framed the question very clearly. The first thing what he said, sell the option in monthly and to get the margin benefit or to protect yourself from the black swan event. So you have to buy option in weekly. So I tested it and I sold 9,000 put option in July month and I bought 8,900 put option in weekly, 100 point below. That's because the 9,000 put option I sold in the month of July, it has given more than 100 rupees premium. So my lower break even is below 8,900. So I choose to buy 8,900 put option in weekly. So I checked, the margin was around 50,000 rupees. If I don't buy the weekly option, then my margin money will be more than 1 lakh rupees. Now with the buying of weekly option, the margin has come down to 50,000 rupees. Now what has happened? If the market has shot up 200, 300 point higher, then by the end of the week, my buy option will go to 0. In the next week, I have to buy again. And that time, because this is very far away, there are many brokers, they do not allow you to buy the options, very far away options. So that is a problem with many brokers. And in fact, whichever brokers I am dealing, I am also talking to them. I am trying to make them understand and asking them whether they can allow buying of options far away. In fact, number one broker in India is Zerodha. So they also have this problem. They do not allow you to buy far out of the options. You can check the video where I have suggested few brokers, and there 5 Paisa Capital, Alice Blue and Zebu, all three brokers will allow buying of options. How to find the direction of the market using open interest or any other simple technique is available? It is impossible. So whatever you are looking at open interest and other things, they are just only the guidelines. And so there are certain things will come by experience only. But even then, nobody can be 100% sure about the market direction. And that is why market has its own risk. So you can come to any conclusion, but what many people are asking, basically they are looking for some holy grail formula. But there is no such holy grail formula in the market. Is it possible to find FII, DII activities during the market hours? I think I have answered this question already. Yes, it is possible, provided you know all the FIIs and DIIs and you make all of them as your friends and ask them over the phone what they are doing. Other than that, there is no way you will know. You will know the data only at the end of the day when the exchanges update in their website. What is proprietary trading or prop desk? Do brokers use them to hedge the client position? Is it bad if my broker is engaged in proprietary trading? And see, proprietary trading means a broker trading in his account. he may not be taking hedge position against you. That is a total wrong view. And the brokers, they do trade on their own, and that is called proprietary trading. So that's it. Dear sir, in Zerodha, if we pledge our shares as collateral to write options, we need 50% in cash and the remaining 50% as collateral. Can we buy Nifty Bs and pledge it as a collateral? Then also we need 50% margin in cash. Please explain. Actually, he has explained everything. I don't know what he wants me to explain. In Zerodha, if you want to trade, the rules are very, very clear. You can give 50% as collateral and the remaining 50% as cash component. It is not cash, it is cash component. So if you buy liquid Bs and give it to them as collateral, that liquid Bs is considered as a cash component. So if you have got 100 rupees, 50 rupees you buy some shares, 50 rupees you buy liquid Bs and give it to them, and still the entire 100 rupees you will get the limit for trading. Of course, there will be haircut for these instruments. You will be allowed to trade. So they will not insist 50% cash. So this is what I've been telling everywhere. So the rule says 50% collateral and 50% cash component, not cash. So what is cash component? So there are a lot of arguments. Some brokers take Bharat bond as cash component, but some brokers they don't take. Some brokers take liquid funds as cash component, but some brokers they do not take. So that is the discretionary power of brokers. But otherwise, there is a way you can trade in options without giving even 1 rupee in the form of cash. If I have hedged a position due to low capital, then I want to square off my buy option, then what happens to my sold option? One, I can't sell bought options for hedged position, or other sold option will be automatically squared off. Let me explain this very clearly. If you are selling an option, the margin money is approximately 1 lakh. Then you are buying an option for hedging, your margin money, let us say it comes down to 30,000 rupees. So if your account has got only 30,000, so you cannot sell the option, because selling of option need 1 lakh margin money. So what you do, the first leg you buy the option, and the second leg you sell the option. Or if your trading system has basket order or simultaneous order, execute them simultaneously. So once the order is executed, your margin money is only 30,000. So you don't have to have 1 lakh. But for one or the other reason, if you want to square up the buy option, then the sell option become naked sell option. Your account should have 1 lakh rupees. If you don't have 1 lakh rupees, then there will be a margin shortfall penalty. So the broker will ask you to pay the money by next day. If you don't pay the money, they will square up the position themselves. And not only that, today if you square up the buy option, you don't square up the sell option, at the end of the day, your account has got only 30,000, your margin money is 1 lakh, so that means there is a shortfall of 70,000. So for that, you will get a margin shortfall notice from the exchange. If your margin shortfall is less than 1 lakh rupees, then the margin shortfall penalty is 0.5% per day. In case if your margin shortfall is more than 1 lakh, the penalty will be 1% per day. And this is allowed only for 5 trading sessions. 6th trading session onwards, if there is any margin shortfall, then the penalty will be 5% per day. So therefore, if you are taking an hedged position, if you square up, you should square up both the positions. Of course, if your account has got more than 1 lakh rupees, you have sufficient margin, then you can square up the buy option, can leave the sell option as it is. Otherwise, you have to square up both the positions together. There was one question that came to me. In fact, same question came to me many times. Sir, you are advising only to the people with the large capital. I have a small capital, 50,000, 60,000. Sir, why don't you advise us? My advice to them is very, very, very simple, and keep away from trading in stock market. So if you want to trade in stock market, that too in futures and options, you need large capital, and people with small capital, 40,000, 50,000, I will suggest you buy some mutual funds and forget it. And you are trading yourself, there is every possibility you will be losing that money also. Thank you.